Good morning, everyone, and welcome to Trading Nadex Binary Options and Spreads using Candlestick Patterns. This is a review of the candlesticks. Okay. Scott, you had a question about a cheat sheet. I do not send out the cheat sheets anymore. What I recommend is that you actually draw the pattern out because it helps you more to draw the pattern yourself than just to refer to a cheat sheet. Okay, before we get started this morning, I would like everyone to read over the Nadex risk disclaimer. Basically, anytime you're trading, even if you're trading binary options and spreads, there is a possibility of losing money. You should never trade with money you cannot afford to lose. Okay? Now, for those of you that do not know me, my name is Gail Mercer, and I've been trading for over 15 years now. I started out with a company that programmed indicators for different trading platforms and simply fell in love with the price bar. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor to Stocks and Commodities, Traders World, and Top Shelf magazine. I've also been a speaker at the Traders Expo, Traders World Online Expo, in the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options and Spread using Candlestick Patterns, Trading Nadex Binary Options using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, and the New Trader's Guide to Trading Nadex Binary Options and Spreads. Any of these books can be purchased on Amazon.com. Now, let's go over what a bullish candlestick looks like. Trading platforms will display candlesticks in different colors. Typically, a bullish candlestick will be green or white, one of the two colors. Now, a bearish candlestick, on the other hand, will either be red or black. Both of them are pretty much the same, except where the open and the close is at. Okay? Every candlestick that you look at will have a couple of basic components. Typically, you will have a body, you will have a lower wick, and you will have a higher wick. If it is a bullish candlestick, then the open is going to be at the bottom of the body. The close is going to be at the top of the body. In other words, when the candle opened, it opened here and then it moved in the upward direction. That's what makes it bullish, okay? The bottom of the wick is considered the low of the price bar. The top of the wick is considered the high of the price bar. Now, a bearish candlestick is very similar, except on the body. The body is what makes it different because the open is at the top of the body, the close is at the bottom of the body. Now the upper wick and the lower wick typically still exist. This would represent the low, this would represent the high. Now, you do have some single candlestick formations. One is a doji. Notice that the doji does not have a body. Instead, it looks very much like a cross, okay? That is because the open is equal to the close, okay? Now, a pin bar does have a body, okay? But the body can either be at the top or at the bottom. In this case, the close is at the very top. So the open is here and the close is here. This would be considered a bullish pin bar. A bearish pin bar would be the opposite. You would have the long wick on the top and the red body would be at the bottom. Now, it's very important when you're trading pin bars, that wick should be at least 2.5 times the size of the body, okay? So if you get a candlestick, and let's say that the wick ended, let's say it ended about right here, that would not be a candlestick that you would want to trade. And the reason is the wick would not be 2.5 times the body. Now, a spinning top, again, can be bullish or it can be bearish. In this case, it looks bullish because the body is green. Notice that the body is right in the center of the candle, okay? But also, if you notice, you have the high here, you have the low here, the body is right here. The body is green, which is what makes it bullish. Now, if this was red right in the center, then that would make it bearish, okay? Now, this is the Bullish Marubozu. Now, notice that this doesn't have any wicks, okay? It opened and it went straight up and it closed on the high. In other words, you don't have any wicks on this bar identifying a high or the low, because the candlestick, the full body, outlines both the low and the high as well as the open and the close. These are not, you don't see these candlesticks very often, okay? You also have the bearish version, which means that the open was here, and that represents the high. And of course, the low is down here, also equal to the close. Now, this is a bullish twin bar, okay? The first bar is red and tells us it is a bearish bar. The next bar is a bullish bar. Notice that both are the exact same size, but they're in opposite directions, okay? Typically, when you see the red-green combination, that tells you the next bar will be green. If it was a green-red combo, the next one would be bearish. That is what you see here. You see the green bar followed by the red bar. That really indicates that more likely than not, the next candle will be bearish as well. Now, this is also a 2-bar bullish, okay? You have a bearish bar followed by a bullish bar that closes above the high of the previous bar, okay? This is indicative that the next price bar will also be bullish. This is a 2-bar bearish, and it's just the opposite of what we saw on the last slide. You have a bullish bar followed by a bearish bar that closes under the low of the bullish bar. Again, this is indicative that the next bar will be bearish. We then have the engulfing, and the engulfing bar will exceed the high and the low of the bearish bar. So here's the high, here's the low. The next bar is bullish, and it exceeded both the low and the high of the bearish bar. Typically, the next bar will also be bullish. Then we have the engulfing bearish bar. Now, in this case, the first one is bullish. The next one exceeds both the high and the low of the bullish bar, and it closes under the low of the bullish bar. This is indicative that the next price bar will also be bearish. We also have the Bullish Harami. Now, the Bullish Harami starts with a bearish bar, like you see here. Then the bullish bar gaps up, okay, and it forms an inside bar. The most important aspect of this price bar formation is that the close of the bearish bar is never tested. Does everybody understand that? This is actually indicative that the next bar will be bullish. Now remember, this must be an inside bar, and the close of the bearish bar cannot be tested. Okay? We also have the bearish Harami. It begins with a bullish bar. We then have an inside bar that actually gaps down from the close of the bullish bar. Again, do not let the inside bar test the close of the bullish bar, okay? If it goes back to test that close, it's not a Harami, okay? Now we also, this is a continuation pattern, okay? You have a bullish bar followed by the bullish Marubozu, okay? That is indicative that the next price bar will also be bullish. This is telling us it is a very strong trend, okay? We also have the bearish version, and again, it is always preceded by a bearish bar, and this is indicative that the next bar will also be bearish. It is considered a continuation bar. Again, these are not seen very often, but when you do see them normally, you're going to get a new bearish bar as well. Now, this one is one that actually is considered one that will stop a trend, okay? In other words, you have been in a downtrend. You've had the preceding bars will be bearish, okay? And then you get a very small bar here that makes a low, and it is followed by a bullish Marubozu bar, okay? That is indicative of the end of the trend. What I like to see is for a test to come back to this low, but this is indicative that the trend is ending. You also have the the bearish Marubozu. And in this case, the little bar is a very, very small bar. And that's going to be bullish, followed by the bearish Marubozu bar. Again, this is telling you that this preceding uptrend is coming to an end, okay? In other words, sellers came in very strong and took the market down and will likely continue to take the market down on the very next bar. Now, a lot of these candlestick formations will actually form what is called pivot highs and pivot lows, okay? With a pivot high, the first bar will be bullish. The second bar will also be bullish, and it will form a high that is higher than the preceding bar. The third bar will be bearish, and it will not exceed the high of the previous bar, okay? Now, it is a true pivot if it closes under the low of the bar that formed the high, which is your central bar, okay? It would be considered a ghost pivot if it did not close above, below the low of the central bar, okay? The true pivots are stronger pivots versus the ghost pivots. Is this being recorded? Yes, it is, Robert. And they will send a email out when they have put it up. Now, a pivot low formation is just about the opposite of a pivot high. In other words, it is preceded by bearish bars. The center bar will be your low. It will be lower than the first bar, and the next bar will be bullish and will close above the high of that center bar. This is what makes it a pivot low, and literally the market will pivot upwards from this low. And again, just like with the pivot high and the pivot low formations, if this bullish bar closes above the high of the bearish bar, then it is a true pivot low. If it closes at the high or less, it will just be a ghost pivot, not as strong as a true pivot, but it still could move the market upwards. Now, this is an example of the pivot highs and pivot lows, and notice that a lot of them also have the candlestick formations that we have talked about in the presentation. We start out with the pivot high here. It is a bullish bar. Now, this is a pivot ghost, okay, because that does not close below the low of the pivot high bar. We then have a pivot low, and this is a true pivot, and the next bar is bearish, and then the buyers step in, okay? Then you have a pivot high. This is a ghost pivot because the bearish bar did not close under the low of that pivot high. What happens? They go back and test the pivot high again, and that is where you actually get the true pivot high formation. That bar does close under the low of it. We do have a small retracement on the next bar, and then we form a pivot low. Notice that this pin bar is red. Does that mean that the market will go down? No. All that means is that the close tick down maybe one tick below the open. But the concept, which is what you need to learn, is still valid. Why? Because they opened it, they went down, and then they pushed it all the way back up. You see that the wick is 2.5 times the size of the body. That makes it a bullish pivot, even though it's red, okay? The next one confirms that, in fact, it was, because it closes above the high of the pivot low. The next bar goes up. It will test the prior high. When it tests the prior high, it could not close above it, and instead it forms a reversal bar to the downside. The pivot is confirmed on the next bar. Does everybody understand that, or do you have any questions on that? Oh, I'm glad it makes sense for you, Liz. Well, thank you, Liz. What about a bearish twin, Jonathan? On the last pivot high, Jonathan? No, actually on this one, it is not a twin bar. See how the high exceeded the high of the green bar? A twin formation. Let me see if I can find one real quick for you. Okay. Do you see my screen? Okay. This is the thing with the twin bars. Do you see how these are really twins? They look identical, except one is red and one is green. That's it. That's a bullish twin bar. Now, a bearish twin bar would be the opposite. It would be green here and red here. Okay? Why are some bars filled in and others are not? That's the way charting does it, Lynn. Some of them will be filled in, some of them will not. Some will be black, some will be white. And if you watch the price bar as it is building, Lynn, then you will see, okay, it opened here and it went up and closed. So this is the one that makes it bullish. And this is the one that does not make it bullish. No, it doesn't have any significance on this chart. The green represents bullish, the red represents bearish. That's all. Now, it may, and if the developer has coded candlesticks to mean a certain color, it could have significance, depending on your platform. And let me also tell you, if you were using candlesticks to identify your entries, I would suggest that you use charting platforms separate from Nadex. Okay? In other words, you're watching the data on the underlying itself, not on the binary side, but on the underlying. Does everybody understand what I mean? Yes, on that illustration, the green represents bullish, the red represents bearish. Yeah, think or swim as one you could use. This is Trading View. You've got multi-charts, Ninja Trade. I mean, there's an abundance of charting services. Liz, I use two. I use multi-charts because I have a scanner that I developed that keeps track of a lot of my stuff. And then I also use Trading View. And Trading View is really reasonable, especially if you're trading forex. I mean, it's, I think, like $30 a month. It's really not bad at all. I use one that, let's see. Oops. I have one that this is called a scanner. So I can tell you everything that's going on all of these time frames. It's a more what I would call heavy duty, okay? Because I trade a lot of currencies. And the difference is like this one, if I want to go look at another currency, then, I kind of have to come over here and click and click and click. And I didn't click here evidently. So now, this way I can change them, but notice that, I can't tell everything that's going on all of the other time frames. But if you're just starting, you don't need all the bells and whistles. okay? You're not going to be able to trade 10 different currencies. You're a beginner, okay? Start out, you know, at that stage. Now, I do want to let everyone know this is the first in a 4-part webinar series that we're doing for October. In this one, we did a review of the candlesticks. Next week, I'm going to do a review of the most common technical analysis techniques, just so that you know, okay, if I use this technical analysis technique, what is it really telling me? Okay. And that's going to be next week at noon on Wednesday, October 17th. Then on October 24th, I'm going to do one on how to choose a market and time frame that is right for you. And then finally, if you have a live account with Nadex, you will be invited to a special webinar that I'm doing that kind of brings all 3 of those together, okay? It's called Applying Your Knowledge, Designing Your Strategies on Forex and Futures. Now, that one will be October 31st at 10 a.m. We're going to do some strategies in that webinar, and then we're going to apply those strategies to a 5-minute binary, okay? But you will only be invited to that one if you do have a live account with Nadex, okay? And that's going to be a really good webinar. I'm new. What do I need? What are you looking to trade, Robert? You do, I think, get webinars to remind you. I know that most of them actually right now are already listed under webinars. The only one that is not listed right now, see, here's the review of the most common technical analysis techniques. You know, just go ahead, take 5 minutes and register. Here's how to choose a market and time frame that is right for you, you know. And then if you do have a live account, that's the one where you will actually be notified by Nadex that you're invited to that webinar. Robert, what time frame are you looking to trade? Are you looking to trade 24 hours? Can you only trade from 8 to 12? You know, is the live account free? It's what do you mean free, Lynn? They don't charge you any fees to have an account, if that's what you mean. Yeah, they don't charge you any fees just to have an account. Not unless you're trading. If you're trading, then they do. Yes, you have to fund the account to make it live. Which their minimum to actually fund an account is actually pretty small. Robert, if I were you, I would probably start with forex. Well, I'll show you how easy it is to find out. If we go to open an account, that's pretty much all you have to do. You fill out the information. Let's see if they have it under frequently asked questions. It seems like it was $250, but I'm not sure. Yeah, thank you, Scott. $250 minimum. I knew it was really low. And you're brand new to trading, Robert? You would want to stay in demo for a while before you actually go live. You want a track record in demo before you ever go live. What the commission structure is. Lynn, they do not charge a commission. They are an exchange. They charge an exchange fee. And if you go to what are your account and trading fees, it's $1 per contract to open with a maximum of 50 per order to initiate a trade, meaning if you're trading 50 contracts or more, then that would be the maximum you would pay. And then it's $1 to close the trade, okay? But if the binary option expires out of the money, which means you don't make money, it's a zero balance, then they waive the $1 settlement fee. The SPX, are you talking about the S&P 500? Okay, that would, I mean, it's still the same fee, okay? But Nadex, the binary, would be US 500 for the S&P 500. And that's the E-mini version. Any other questions on Nadex or the presentation today, guys? If you do have any questions after the webinar ends, you can always email me at gm@tradershelpdesk.com. And you can also visit my website at www.tradershelpdesk.com. Well, thank you, Scott. I'm glad